Welcome to week 3, and it is the first Macro Monday for 2018. In this one, it's a little bit different from the normal ones that we do. We just focus strictly on structural kind of views, backdrop on global macro and economic data, and then kind of going back to some of kind of the themes that we still see continuing into kind of 2018. For those that have been following our Macro Monday calls for 2017, you actually know that many of the views are kind of still intact. Fundamentals don't change at the start of a new year. The key thing that can change is sentiment, but I think so far the sentiment that we kind of have is still very much kind of risk on, low vol. But with that said, it's only 2 weeks into the start of kind of the new year. So do have a little bit of a look. We do also, in addition to global macro, cover crypto. Again, taking a kind of very big picture kind of perspective. Key takeaways from a structural long-term perspective. The crypto party is just really starting, and there's still a lot of things that are going to be happening that this year, big things. And the key risk this year, at least from a global macro perspective and markets in general in any asset class, is potential upside risk on inflation expectations out in the US. As we talked about going into the end of fourth quarter, this fiscal stimulus, it's not tax reform, it's tax cuts, and it's fiscal stimulus on the backdrop of what is one of the strongest economic kind of growth periods in the U.S. in like close to over a decade, right? And that could potentially force not only maybe the Fed's hands, but or expectations on U.S. rates. So definitely something to keep lookout for. And wishing everyone a fantastic start to the new year.